Subpart 3 within Bank Holding Company Act, registration and reports of bank holding companies. Kind of interesting because it's only an A and a B here. A being must register within 180 days of becoming a bank holding company, and B must send annual report of operations to the Federal Reserve Board. Roman numeral 4, acquisitions. Transactions requiring Federal Reserve Board approval. 1, formations of bank holding companies. 2, acquisitions of subsidiary banks. 3, acquisitions of control of a bank or bank holding company, securities, stock of a bank or bank holding company, and does not include stock acquired through dividends or in stock splits. 4, acquisition of all or substantially all of a bank's assets. And 5, merger of bank holding companies. 6, any transaction whereby a foreign bank acquires a U.S. bank or bank holding company. And letter B, transactions not requiring Federal Reserve Board approval. 1, those are acquisitions of securities in good faith as a fiduciary unless the acquiring bank has the sole authority to vote the stock of more than 2 years, or unless the acquisition is for the benefit of the acquiring bank or its shareholders, employees, or subsidiaries. Acquisitions of control of voting securities of a bank in the course of securing or collecting a debt previously contracted in good faith, provided the acquiring bank divests the securities within 2 years. Acquisitions of securities of a bank or bank holding company by a bank holding company if the bank holding company already controls more than 50% of the voting securities. Mergers, number 4, that are subject to the approval of a bank regulatory agency under the company, in which case the Federal Reserve Board must still approve it. Number 5, internal reorganizations, including the merger and holding companies owned by the same bank holding company for the formation of a subsidiary holding company. 6, holding securities in escrow pending an approval by the Federal Reserve Board, provided the title and voting control remain with the seller until the sale. And lastly, these are transactions not requiring Fed approval, acquisitions of foreign banking organizations where the foreign banks do not directly or indirectly own or control a U.S. bank or a U.S. bank holding company. Letter C, under the acquisition sections, factors considered by the Federal Reserve Board for acquisitions. And anti-competitive transactions is number 1, where the Federal Reserve Board will not approve an application if it could create a monopoly, or the effect of the transaction would be to lessen competition in any part of the country or restrain trade unless the benefits of the transaction are outweighed by its meeting the needs of the community. 2, financial condition of a bank holding company and its subsidiaries, including the current and projected capital levels. 3, competence, experience, integrity, and compliance record of management of the bank holding company and its subsidiaries. 4, convenience and needs of the community, including Community Reinvestment Act performance. 5, whether the applicant has given adequate assurances to the Federal Reserve Board and it will provide all necessary information on itself and its affiliates. And lastly, the board may impose conditions on any approval that addresses competitive, financial, managerial, safety and soundness, convenience, and compliance conditions. Letter D, expedited acquisition procedures for a well-run bank holding company. Institutions that meet these criteria for a well-run bank holding company may use expedited procedures for acquisition applications. A, the acquiring bank holding company is well capitalized. The lead depository institution of the acquiring company must be well-capitalized. And well-capitalized depository institutions must control at least 80% of the total risk-weighted assets of insured depository institutions controlled by the acquiring bank holding company. 3. No insured depository institution controlled by the acquiring company may be undercapitalized. The acquiring bank holding company is well managed. Its lead insured depository institution and at least 80% of the total risk-weighted assets of insured depository institutions controlled by the holding company must be well managed. No insured depository institution controlled by the acquiring bank holding company has received one of the two lowest composite ratings at either its last examination or at a subsequent regulatory review, whichever is later. And 3rd, a depository institution acquired by the holding company during the 12 months preceding the notice filing may be excluded from the well-managed test if the holding company has developed a plan to restore the capital and management of the institution and the aggregate of such excluded institutions represents less than 10% of the aggregate total risk-weighted assets of all insured depository institutions controlled by the bank holding company. Letter C, for, I guess this is criteria for being a well-capitalized bank. The record indicates that the proposed transaction would meet the convenience and needs of the community standards of the bank holding company. D, the lead insured depository institution and the insured depository institutions that control at least 80% of the risk-weighted assets of the holding company have received at least a satisfactory CRA rating. E, no timely and substantive negative public comments are received by the Federal Reserve Board. F, the acquisition does not injure competition in banking markets. It does not cause insured depository institutions controlled by the acquiring bank to control in excess of 35% of the market deposits in any relevant banking market, or cause the Herfindahl-Hirschman index to increase by more than 200 points in any market within an index of at least 1,800. And the Department of Justice has not indicated that the transaction will have a significant adverse effect on competition. G, size limitations. The sum of the aggregate risk-weighted assets to be acquired plus the aggregate risk-weighted assets acquired by the acquiring bank in all other qualifying transactions, those during the 12 months before filing, does not exceed 35% of the consolidated risk-weighted assets of the acquiring company, not applicable to small holding bank companies, and is written here in the margin. 2, the total risk-weighted assets to be acquired cannot exceed $7.5 billion. And H, no supervisory action was outstanding against the bank holding company or any of its depository institutions during the 12-month period ending on the date the bank holding company desires to consummate the transaction. I, board approval is not prohibited by the bank holding company. And J, the board has not notified the acquiring institution that a non-expedited application is required to permit closer review. 2, the Federal Reserve will act on an expedited application within 5 business days after the public comment period closes. 3, a filing under these procedures must contain the following, unless waived by the appropriate Federal Reserve Bank. That's A through I. A, certification that the company meets the criteria for expedited application process. Description of the transaction, including the identification of the companies affected in the transaction, by the transaction. Description of the effect the transaction will have on the convenience and needs of the communities to be served, and actions to improve the CRA rating of any insured depository institution with less than a satisfactory rating. D, evidence that notice has been published in the appropriate media. E, for companies with assets of $500 million or more, an abbreviated consolidated pro forma balance sheet, consolidated pro forma risk-based capital ratios for the acquiring company, and a description of the purchase price terms and sources of funding. F, for companies with assets less than 500 million, a pro forma parent-only balance sheet, the purchase price, terms, sources of funding, and scheduling for retiring any debt incurred in the transaction. And G, for companies with consolidated assets of less than 300 million, a list of and biographical information on all directors or senior executive officers of the resulting bank who are not directors or executive officers in the acquiring bank holding company or of the company to be acquired. H, if the Tier 1 capital, total assets, or risk-weighted assets change as a result of the transaction, the total risk-weighted assets, total assets, Tier 1 capital, and total capital of the company on a pro forma basis. I, the market indexes for each relevant banking market reflecting the pro forma effect of the transaction. And letter E, procedures for other applications. Must file an application with appropriate Federal Reserve Bank. Federal Reserve Bank will notify primary supervisory agency of bank to be acquired and will publish notice in the Federal Register. If a primary bank acquired if primary bank acquired and will publish notice in the Federal Register. I'm sorry, let me reread letter E. These are procedures for other applications. 1, the bank must file the application with the appropriate Federal Reserve Bank, and the Federal Reserve Bank will notify primary supervisory agency of the bank to be acquired and will publish notice in the Federal Register. If the primary bank supervisory recommends disapproval, the Federal Reserve Board must order a hearing. The Federal Reserve Bank will, within 7 days of receipt of application, either accept it, request additional information, or return it if incomplete. 4th, the Federal Reserve Bank will act on accepted application within 30 days from acceptance unless it refers the matter to the Federal Reserve Board. The Federal Reserve Board will act on the application within 60 days from its acceptance by the Federal Reserve Bank unless it notifies the applicant that the period is being extended and states the reasons, which is a maximum of 91 days. F is the notice and comment requirements. 1, for both expedited procedures and procedures for other applications, see D and E above. Just read them. The applicant must publish a notice in the newspaper of general circulation and provide an opportunity for interested persons to comment for at least 30 calendar days. Notice must be published no more than 15 days before and no later than 7 days following the date that the notice or application is filed with the Federal Reserve Bank. 3, the Federal Reserve will publish a notice in the Federal Register and provide an opportunity for interested persons to comment for no more than 30 days. Acquiring company may request advanced Federal Register publication. The public comments, number 4, will be considered timely if they are received before the expiration of the latest comment period. The Federal Reserve Board will notify the Attorney General of action on applications. The Federal Reserve Board will order a hearing if it receives within the 30-day comment period a written recommendation of disapproval from the supervisor of the bank to be acquired. The Federal Reserve Board will be deemed to have approved an application if it does not act within 91 days of the date it received the complete record. And the Federal Reserve Board does not have to give notice or a hearing in cases of probable bank failure or in emergencies. And 9, except in cases of probable bank failure or emergencies, no approved transaction can be consummated for 30 days following board approval. G, requirements for one bank holding company formations. If covered, a one bank holding company transaction may be consummated 30 days after notice to the appropriate Federal Reserve Bank. Covered transactions, number 2, include A through H. A, shareholders controlling at least 67% of the bank will control at least 67% of the shares of the holding company in substantially the same proportion. B, no shareholder or group of shareholders acting in concert will own or control 10% or more of voting shares of the bank holding company unless authorized by the appropriate regulatory agency. The bank is adequately, C, the bank is adequately capitalized. D, the bank's most recent examination yielded at least a satisfactory rating. E, neither the bank nor its officers, directors, or shareholders is involved in any unresolved supervisory or enforcement matter with any federal banking agency. F, the company demonstrates that any debt incurred in the transaction will not place an undue burden on the company. And G, the holding company will not, as a result of the transaction, gain control of any additional bank. And H, the Federal Reserve has not objected to the proposal. 3, contents of notice. A, certification that all requirements have been met. B, list of all principal shareholders of the bank and holding company before and after the proposed transaction. C, a description of the resulting management of the proposed bank holding company and its subsidiary bank. Roman numeral 1, biographical information on any senior officers and directors who are not senior management in the bank before the transaction. And Roman numeral 2, information on the involvement of any officer, director, or principal shareholder of the bank holding company who has been involved in any administrative or criminal proceedings. And D, pro forma financial statements for the holding company. Number 4 under the notice requirements, am I right? Under F, notice and comment requirements. The Federal Reserve will acknowledge notice within 7 days of receipt. And 5, the Federal Reserve does not object. The transaction will be complete on the 30th day after the date the receipt of the notice. If the Federal Reserve objects, it will provide the bank with a written explanation. I think I'm going to stop there before going into non-bank activities, which is subpart 5.